Okay, let's start the borrowing. Okay, see my screen, hear my voice. Okay, thank you very much, ladies and gentlemen. It seems that most of you are a mixture of old timers and new time and one or two new people. Okay, let's start the borrowing. Don't waste too much for it. If not 12 o'clock. As I said earlier, this session is going to be divided into two sessions. Okay, one the slide presentation part. Okay, okay, and after that, after that, we have a break. Okay, coffee break. Then followed by live market discussion. Live market discussion means what? Literally means what it means. Live market discussion. So especially those are my public members. Okay, I strongly suggest you to make use of it by doing what? By standby companies you want to look to trade. Okay, look to trade. So here a minute, somebody drop me a message. Open to public. Okay, Vincent. Now let's start the ball ring. So before we go further, usual disclaimer, ladies and gentlemen, the ability, if you want to make money, the ability, you want to make money, let's say do me a favor, the you want to make money, prepare to lose money. Simple as that. Okay? Simple as that. The ability to make money implies the ability, okay, to make money, you must prepare to lose money. Sorry, yeah. Is my voice okay now, or is it too soft, or am I losing it? Okay, now let's go faster. So simple lah. Making money, losing money is one own personal responsibility. Nothing else to say about it. Okay. If you cannot handle responsibility, or you want to sure win one, or you want to Chinese say 包家 one, etc. You want to put in $1 to make $500 and 99% win probability one without effort, time and commitment. Then please go. This is not the place for you. I don't market or promote or sell or teach illusions and delusions. For those who are public members, I offer free consultancy sessions. Okay, this is my personal WhatsApp. This is my personal WhatsApp number. Drop me a message if you want a private session to me free. Okay. Uh, if you want help, advice in your trading and studying your market, or you're lost, find me. Okay. For those who are first timer here, second timer, I am by nature a portfolio trader. Means what? I trade. I trade. I trade. Means I trade all different strategies: bullish, bearish, sideways. From you, every strategies you think of, I use before. I'm not joking. I can do intra-minute trading in out within 1 minute. Okay, I can hold a trade for 6 months, 1 year, 2 years. So to me, strategies are just tools. Shares, futures, forex, options are interchangeably. My focus style of trading is to see market, then assess based on my trading needs, capital, and my thinking. Then I will choose the different underlying duration. Strategies to me always come last. To me, I repeat again, strategies is just tools. It always come last. So basically, for those who don't know my ground, officially retired from the rat race in 2002. 2005, 2007, I elected president of a non-profit trading clubs of Singapore. 2005, 2007 to 2009, Ichi Finger spent $500,000 to buy online trading academy franchise and the first owner. Then 2009, 2010, I formally start Traders Roundtable. No, I'm not a professional trader. Most of the bank's professional traders do not survive as a retail level trader. In the world of trading, professional trading with Citibank or HSBC or Goldman Sachs, most of them cannot trade. Most of them trading with your own money and trading under a bank is totally different thing. Most of the bank traders I know cannot survive and trade their own one. Okay, and I generally I and generally general I and the portfolio means I trade everything. Next week, Friday night, non-farm payroll again. So definitely we will have a what I call live market trade non-farm payroll session. Tonight's stocks primarily focus more on shares and options. Okay, in general, most of you are in directionality. Of course, later on the live market part, we will teach you how to do multi-directional trades. Okay, I'll show you how to do multi-directional trades. Before we go further, what is trading? Scalper, day trader, swing trader, fundamental, positional, technical, breakout, momentum, trend, predictive, counter trend, price action, contrarian, premium selling, hedging selling, many other types. Are just trading, just simply buying or selling, buy to open, sell to close, sell to open, buy to close. As simple as that. So different style, different things. The only thing is that they have different objective, different objective, different duration. If as a day scalper, I scalping a trade most of the time with intra hour, intra 15 minutes. You cannot call yourself a scalper if you want to do a 6 months long trade. So most of you are what I call strategy systems based trader. Means that you use specific strategies or system based on FA fundamentals, based on technicals, based on charting, based on indicators, based on option premium analysis, etc., or or price action sentiment analysis, okay, or market sentiment analysis to find opportunities to trade. Basically, you have a trading method, then you find the opportunity to trade as well. This is the most common form of trading. Okay. However, in my world of trading, Thomas, you said I mentioned to you. You said the good trader. You mentioned just to say trading is last. True, trading strategy is always last. But you all started off as strategies. I got this. I'm looking for the best strategies. In the world of trading, there's no such thing as best strategies. All strategies make money. I could guarantee all strategies can make money. Okay, I'll explain to you why. Okay, I'll explain to you why all strategies will make money. Mr. Lam, understanding so far? Do you understand the statement? I say all strategies sure to make money one. Because for every buyer, there must be a seller. It means what? For every winner, for every loser, there must be a winner. Your money, with the money you lose, Do not go to somebody else. So in my world of trading, I always focus in my style trading is always my secret successful trade is always risk first. You notice risk first. Profitability, profit and probability last. Risk is always first. And by ladies and gentlemen, when I say risk, they got 12 different type of risk. Besides dollars and cents risk, they got 11 other risks. No. Wrong. I bet wrong. Ask you a question. Are you question, Mr. La? Make it easy for you. As a driver, you want to have one car or you want to have 10 different cars? You do train better. You drive one car only, or you drive 10 different vehicles better. You understand what I say? Okay. Remember, strategies is just tools. If you cannot handle your tools, whose fault is that? Okay. Before we go further, any questions? Anybody got any questions? Dennis? Please don't be shy to ask. Tonight we are focusing on two things, shares and options. Options is a financial instrument, so I don't talk too much about it because end of the day is wasting each other's time. But just know that options is a financial instrument that is a derivative based on underlying securities. It can be stocks, index shares, futures, property, forex, gold, crude oil. Okay. Here's an example: shares versus options. Can you all see this one? Mr. Lam, who else are new here? Please, do not be shy, My job is to tailor to your speed. Don't worry about it. Most of the people attending here are my students. Okay? Are my current students or past students. Okay? So don't worry about them. So if you are new, ask the right question. Mr. Lam, any questions? Okay, you understand why as a craftsman, as a as a as a as a master craftsman, as anybody, having one tool is better or having 10 different tools is better. Okay? Can you all see here lah? For example, now you want to do a bullish share versus option trade. You want to do a bullish trade versus do a bullish trade on Amazon. Amazon, 100 shares will cost you 33. One share is how much? $3,341. For this example, 19th of September, okay? You can buy 100 shares. Very good. In fact, it's zero commission. Okay? But one thing bad is what? 100 shares. I don't care what you use, CFD, spot forex, or whatever it is. Buying 100 shares of Amazon will cost you $334,000. Okay? So in this case, if you since you don't want to buy the shares, you can buy option share. Yes, you can buy a bull call. You can buy a bull call option. Okay, for how many months? For 30-day cycle, cost you $9,095 or $9,570. No problem. Okay, or you can buy a bull call spread, cost you $5.02 or $502. So Mr. Lam, which as a person who's or anyone else, which one better? Buy shares better, buy buy bullish option better, or buy bullish spread better? Which one better? Can you type yes or no, please? Thank you very much. There's nothing wrong to buy to buy $300,000 of shares I do that nothing I have no problem. I have no problem to buy 6 figures of shares and thing Unfortunately, sorry to say this. Ladies and gentlemen, all the price you see here, buy 100 shares, 33340, the $334,000, $9,500, $500 is fixed capital risk. The worst case, if you buy a bullish call at $9,995 or $9,570, worst case, how much can I lose? Gentlemen, the dollar value you see down here represent total maximum loss of that position. And you ask me the risk option is higher? Bullshit. That means what? You have not traded options before, or you have been taught to trade the wrong options. Okay? So which are risky? $500 risky, $9,600 risky, or $334,000 more risky? Can somebody help Mr. Lam up? What the worst case options can you lose? Type an answer. So if you go and buy the option spread, the maximum loss if the market go against you is $502. The price you pay for. All the methodology you see here, the dollar side represents fixed capital risk trail. If you buy you go and buy a bullish spread a bull call spread option for $500, your maximum trade is $500. Okay. Oh, by the way, guess how much can you make? The actual profit for this trade is not $500. Sorry, I typed wrongly. Actual maximum loss. Look at the bottom part here. You can see here now. The bottom part here. Maximum profit is 502. Maximum total loss is how much? $498. Maximum profit is $502. Maximum total loss is $498. Options. What's buy a bullish option? Profit infinite like the share. What's the maximum loss? 9,057, 9,000, 9,570 dollars. If you shares, what's the maximum loss? The amount of money you pay for it. You buy 334,000. That is a worst case capital exposure. Here is a recent trade. Sorry, I never type it inside. I think a few days ago, Monday night, somebody after one of my classes, okay, during one of my classes, somebody asked send me a message about Caterpillar. On the I've on 24th of August this week, 10 10:07 p.m. Singapore time or 10:07 a.m. New York time, okay, we enter a bullish trade. Instead of buying the shares, ladies and gentlemen, instead of buy 100 shares, buy shares at 208 dollars or $207. I bought, okay, this options. One options was bought at $325. Okay, hold it for 2 days. On the 26th after midnight, sell the $325, sell it for $490. Okay, listen to me carefully, okay. I take profit at $490. My initial buying price is 325. Is what I mean $165. $160, okay, stop. But my capital for this trade is $325. Ladies and gentlemen, in this options substitution trade for shares, I make the trader make 50% return. Make 50% return. If you have buy the shares at 207 and you take profit at okay lah, take profit at 212. So 207 to 212 is $5. Okay, nothing wrong with the $5. Ladies and gentlemen, Thomas, you make $5. I make more money than you, Thomas. Stop. You make $5, crap. What's the share value? The share value is 207. If you buy shares, you make 2.4%. If you buy options, you make 50%. Okay? So which one better? You want to buy 100 shares? Nothing wrong. 100 shares at 207 times one share is 207 times 100 is how many? Is $20,700. Or you can buy one option at 325 times 100 is $305. Mr. Lam, you understand the basic principle behind it now? So which one? Ladies and gentlemen, if you have bought the shares at $207, you think your stop loss will be $300? Your stop loss will be $3 or $4 stop loss? Okay, don't worry about mechanics. If you pass your arithmetic, you can learn one. Because you buy an option to substitute your shares. You can buy the shares at 207 You better go buy option for $3.25 If you can buy the shares at $207, do you think your stop loss will be $3 plus? By the way, these are edu trades, Aladin, are you here tonight? Aladin? So there's so many ways of trading. Okay, most of you are active. Most of the directional traders are active style. In my world of trading, I got strategy that is totally passive income style. I say look carefully, minimum risk, minimum time. How much money you want to make? Up to you. But when this slide is not done by me, this slide was done back in 2014 by a bunch of interns. Okay, I explained to them one of my passive income strategies. They go design this slide for me. This picture for me. Any question, anybody? Options, if you know what you're doing, is very powerful. You can use even day if you're skillful and competent. Okay, you can even use options to do day trading. You can see the trades here. was done over a period about not very much, under 3 hours plus. Can you see the timing? What timing? Hey, sorry. Timing here is 5:55 p.m. That is local timing. What's what timing? Greece timing. Buy options for day trading. 4:55 buy options at $275 each option. Take profit, sell to close at $400. 5:12, 17 minutes later. Then this one let's see, 39 minutes later, take profit, buy 275, take profit at 555. So gentlemen, if you know what you're doing, not true. Mr. Lam, there you must repeat again. What is the objective for a trade? Most of the time, if you are doing scalping shares, if I doing intraday scalping shares, most of the time shares will be better. Not all options can do day trading. And on the other hand, if you want to do swing trading, you want to do long-term investing, 2-3 years, 4 years, 5 years, shares is better. But you want to do a trade for 14 days, 3 months, 1 year, most of the time, not all the time, okay, when I say most of the time, for the better, more well-known companies like Alibaba lah, like Baidu lah, like SPY, S&P 500 lah, all the most popular liquid one, for this starting options will be better. Why? Look, I shorted Tesla at $334. I can short the shares. Instead of shorting the shares, I buy a put. Cost me $2.75. If I short a share at $230, that means my stop loss is definitely more than $2.75. Okay, does not mean all shares have good options. But if everything goes well, it's always better to use options. If you can use options, we use options. If not, we use shares. Anybody got any questions? Why, Mr. Lam, why don't you put up a list of companies you want me to look at? Put up three companies or 4, no problem. Or even 10 companies. Okay? Okay? Put a list of companies, then tonight I will go through your companies one by one. Then I will explain to you what would be the better way to trade. Mr. Lam, would that be better? Instead of doing theoretically. Okay, I am a practitioner. Inside my style of teaching, I don't believe learn to trade. For me, it's always trade to learn. I repeat, my style of teaching is always trade to learn. Last night, during one of my teaching class, my students, I analyze trades for my students, explain to my students, and let my students trade. Okay, and the best part, all the students who enter the trades all make money. Okay, and most of them are here. Anyway, the world of trading are many different types. This is the screen capture of one of my Facebook friend. Okay, forgotten his name already. He posted this picture up. I take it out for him with his permission. And I put it here. Can you see it? He's trading FX now. By looking at the pattern, you can recognize it as MT2. Okay? Nothing wrong with trading. You can trade this, you can trade passive, or you can bring a tablet, or today don't bring tablet lah. Today you can get any smartphone with a 6-inch screen will do a job nicely lah. Okay. Before we go further, let's start the capital. Capital to start trading. Okay, you see capital. I said capital to start. I never say capital to become a multi-millionaire. Notice shares and futures need the most capital. $30,000 for shares, okay, or $40,000 for shares. CFD cheaper, but CFD and spot forex are highly leveraged private instrument. They're what you call over the counter. They are private. The broker can lend to 5 times, 10 times, 50 times, 100 times. If you go to some 100 times leverage for spot forex, in my personal experience, I was offered up to 5,000 times leverage before. But currently, Singapore market, most of them are 30 times, 20 times. International speaking is 100. Australia is 100. Okay. Next one. US options. You can go as low as $4,000. Okay. Certain US broker like TD Ameritrade, Interactive Broker, they let you to have what you call all-in-one account. Basically, you can open an account for $30,000, $40,000. They let you to trade options, shares, futures concurrently. Subjected to your margin, of course, subjected to your margin and your buying power effect. Currently now, Interactive Brokers and TD Ameritrade, both of them are licensed by MAS. Okay, they about $4,000-$5,000. You can start trading with them again. Questions? Hey, gentlemen, beside Mr. Lam here, anybody other new people here now? Is there any other new people? Do not be shy. Okay, Tan BC, good. Tell me your experience. Okay, tell me your experience. Forex trader, CFD traders. Okay, Singapore market or US market? Good. Okay, since you're joined here, Mr. Tan, to help you understand options better, why don't you give me a few of your companies you like to buy shares on? Then buy shares to trade. Okay, when you buy shares, Moderna, okay, beside Moderna, what else? Okay, then from there we go through. Same thing for Mr. Lam here. Any companies we want to put a list up? Oh, T-Doc. Slowly, okay? Later on. Okay? Okay. Good choice. Apple, Nvidia, Adlantech. Okay, Alibaba. Okay, good choice. AMD. Okay, good. Since the public members here, we will go through all the 7 different companies here. Okay. I will give my opinion and I'll structure a trade for you. Ladies and gentlemen, tonight's session is talking about trading only. Long-term investing, we talk separately. Okay, let's go back to the slide presentation. Let's go back to the slide presentation. Now, in most of the world of trading, most of the world of trading of trading, what type of traders are directional traders. Most of the you buy shares, correct? I predict your share will go up based on technical analysis, based on charting analysis, based on momentum, based on price action, or based on fundamentals. Based on fundamentals, the company is so too cheap already. I go and do a bottom fishing trade. I want to buy a trade for 1 year. Okay, so most of you are fundamentals, technicals, chart patterns, or whatever. Your what time is what I call you're doing what we call one dimensional trading or one directional trading. Okay, very common. It can be a trend, or somebody do predict trading, hit a 6 months low, bounce to bullish candle, do a reversal trade to a 6 month high. Okay, can also. We can discuss about it. Trend trading is one. What we call predictive trading is one. Counter trend trading is another one. Scalping is another one. So many different ways. This is your style work. For my students and my traders, we are not trading one directional trading. We are trading 6-dimensional. Okay? We are 6-dimensional trader. You can see there. Normal market is bullish, bearish, sideways, ranging. Normal market. But in the world of it, you can notice got two red color one, ultra up, ultra down. What you call breakdown or breakout abnormal move. Those are minorities. Those are considered abnormal. Then there's another style of trading that is not chart pattern based or chart pattern based or share price based. It's based on option premium volatility analysis. Tonight I will show you. Hopefully hopefully I can show you some opportunity. Okay, you notice now. What I mean by multi-directional trading? Okay, we got strategies. We got directional strategies. That you instead of one directional trade, instead of one directional trading. One direction. One directional. You can trade 2.2 directional. When you buy a bullish trade, for you to make money, you must go up, correct? Yes. Mr. Lam, they got options for treasury bills. Yes. We got for this one is what is the treasury bills, right? For short term, you got SHY, SHY. Then another long term is TLT. Okay, I will show to you later, Ken. Mr. Lam. Okay lah. Most of you are directional. Either you take a trade bullish, I make money. Bearish, I make money. Don't move, I lose money. Market move against me, I lose money. Ladies and gentlemen, in my world of trading, I got strategies that trades that are out of the three directionals okay, out the example bullish, bearish, and sideways you can enter a trade that are out of three don't move also can make money. Or market go against you also can make money. That's why I said we are multi-dimensional traders. Anybody got any questions regarding the 6-dimensional trading? Anybody? Anybody got any questions? Now, okay, still got time. Okay, there are many different ways of market analysis. I only interested in practical one. Of course, I know they got PhD or people or software engineer need to spend 500 hours to 1,000 hours, 10 hours to create software analysis software. No, I don't do that. We by nature we are traders. We are retail level traders. So we cannot be going and buying $51 million supercomputers and every month pay 10,000 US dollars for their direct data feeds. So to do advanced form of market analysis. So let's go in the different practical market form analysis. One, most common fundamentals. Fundamentals come out every 3 months, got earnings report. US equity market. Technical analysis talking about chart pattern, trend lines, whatever moving averages. Okay, okay. Then Bollinger Band CCI channel what shooting star Next, price action trading means that we are trading on the basis of the last 5 candles. Technical analysis need you to analyze 30, 40, 50, 500, 100 candles. 1,000 candles. 1 year got 352 days. Every month you can analyze 22 candles. 22 every 30 days you can analyze 32 candles, daily candles. One day US market 7 hours. If you analyze if you analyze 15 minutes candles, you analyze 5 days, 5 days of 5 days, 5 days chart patterns, 15 minutes candlesticks. One day is how many candles? One day is 28 candles. 5 days of 15 minutes is 120 candles. Sorry, is it 28? 140 candles. Price action trade with that on the basis of the last 2-3 candles only. Next, quantitative options analysis is a form of market analysis that analyze options option premium pricing. Compare to technical analysis, fundamental analysis, which analyze his past data or previous market information. Quantitative option premium price analysis is future analysis. I will explain to you more later on. Then lastly, market sentiment analysis. You notice I gray out because it's a form of trading that I use a lot. This one no formula based. This one had to learn by doing a few hundred trades. Anybody got any questions? You all can hear my voice, correct? Everybody okay? Type yes or no, please. I'd like to know what's going on. Thanks. Now, before we go further, okay, in my world of trading, I always define risk as two steps. As I first statement, what is financial risk? Risk or the type of trading got two type of risk: open risk versus fixed risk. Okay. Mr. Tan and Mr. Lam, listen properly. This is if you don't learn much for this, you learn this one, okay? Okay. What is open risk? Open risk is defined as trading full capital value of shares of underlying share positions. Okay. So when you go and buy 100 shares of Amazon, okay, it's $300,000. If you go and buy a share AMD, let's say the AMD now make it easy 100 and make it $105 Buy 100 shares of AMD $105. That is $10,500. No matter I put it, you are making money. You are making money on your what value? $105 per share. 100 shares is $10,500. That is considered when you do that, it's considered full capital risk value of share positions. It's considered open risk. In my world of trading, I always focus on one thing: fixed capital risk. Fixed capital is defined by you. Fixed capital is trading a predefined dollar value determined by you before you open the trade. Notice the word without the use of stop loss, margin, leverage, or buying power effect. Mr. Lam and Mr. Tan, any question regarding this? This is very important. So instead of putting in buy $15,000 of shares, then you put in a $500 stop loss. Okay, let's say now you go and calculate it. I go and do a $15,000 worth of shares position. Then I go and put in a 5% stop loss. 5% stop loss of $15,000 is $50. So instead of buying 100 shares at $15,000, you might as well go take your stop loss or cut loss value, 5% value of $50, and use it as your option fixed risk capital. Okay, so basically every trade we enter using options. Not a problem. Slippages is not a problem, ladies and gentlemen. It's only you do not know what you're doing, the problem. Gap up, gap down, not a problem. Can I tell you fine, ladies and gentlemen, one of the most dangerous position to be is you having a share position and suddenly like Alibaba like that, drop in less than 1 week drop 15%. You will die, Your stop loss may not save you at all, You might understand what I'm saying, my Mr. Lam. We are taking you have a position of 15,000 US dollars based on shares. Then my students trade the same company, say the same company using options $750. So we should have more risk. You trading with 100 shares of $15,000 or somebody trading option position of $750. Options $750 worth of $750 worth of option trades or 15,000 worth of share trades. Which one more risky? Here's one good example. It's a bit old, but it's still valid. Company called Square, bearish. We can short the shares. If we short the shares about $240, you need then you short you collect $24,000 upfront. Of course, if you short the shares by CFD 5 times, you need about how much? 5 to see the 10 times 5. You need about $4,800. Buy a bearish option trade, $206. Or buy a bear option spread trade, $90. Which one better? It depends on you. If your account size is $10,000, do you think it's a good idea to trade $24,000 worth of short $24,000 worth of shares? The unique features of option trading is that, okay, upfront, when you trade shares, for you to make 10% in share value for short-term trading, okay, you buy a share, you make 10%, is considered a very good trade already, 10%. Okay, but for option trade in the same duration, you make a 10% return trade on options is considered a failed trade. Good question. Look carefully. Can you see or not? A put is a bearish trade. You buy a put, is buy. Okay, a hedge spread means what? I buy one put, I sell one put. Instead of paying $263, I net 90 cents only. Okay? This is by way EduTrade. Hold it in 2 days. Buy 90 cents, top profit at $235. Okay, my net profit is $145. My capital risk only 90 cents to 90 cents only. Yes. Having buy one, sell one. Objective exercise is to minimize your capital exposure or to minimize your capital risk. Okay, don't worry, Mr. Lam. I will share to you later on. Questions? This is why my student trades. Okay? Somewhere in the month of May, a few months ago, one of my students said, okay, I believe our good friend Beyond Meat will have a strong bullish move. Strong bullish move. So on the 25th of May, she bought option for a intra-month cycle. Means that he bought options intended to hold it for 30 days. Okay? He bought the options for $6. Okay? 2 days later on the 27th, he's right. Beyond Meat have a big strong move. He buy to open at $6. He sell to close at 23. He can buy the shares. It will cost him $11,700. Instead of buying the shares for $11,700, he calculated his stop loss value around $9 or $10 stop loss. His stop loss is $10. Then he take the stop loss or cut loss money and buy an option trade instead. Buy option trade instead. So you buy option for $600 on the 25th, on the 27th, he sold it for $2,300. So this profit for his trade is $1,700 on return on capital risk of 283%. So ask yourself, ladies and gentlemen, what he did is that he wanted to buy the shares, but he calculated his stop loss was $8-9 worth of stop loss to buy the shares. So he calculated, in this case, he checked, he think option is better. Instead of buying $11,700 worth of shares and put a $9 stop loss inside, $900 stop inside, you take $900, go and buy, you go and find a option trade that costs you less than $100. By the way, this is not my trade. This is one of my student trades. Mr. Tan and Mr. Lam understand this, and you understand the difference. You understand this trade example now. It depends what's the objective. Beyond Meat is very liquid, so you can do it for you can have a trade for every trade for the next 5 Fridays. That will depend on your primary objective and your capital, of course. There's no reason for you to buy 30 days trade to buy a 30 days option when you want to hold it for 6 months. Don't worry, Mr. Tan. We will after around 9:45, 10 p.m. tonight, we will have live market sessions. We will go through all your companies one by one. If I can't do it all, I will do at least half a dozen or 10 of it. You understand now? So instead of buying the shares, you buy options. You buy options that you pay $6 for it or $600 that give you the right to buy Beyond Meat shares at $118. This option is called as a call. So by the way, another check. How many of you are new? Besides Tan and Mr. Lam here, who else are new? First timer here or second timer here? Here is another trade. This one we're not using on shares. Yeah, you're doing a bullish trade on the index. SPX, S&P 500 cash settle index. This is a bullish trade. Okay, now, so when to do a bullish trade, you cannot buy a long direct SPX cash index. You can buy you can long of S&P 500 futures. You can't buy direct because index is just a number. However, if you trade CFDs, you can long 100. You can buy 100 units of SPA index. Okay, 100 units. 100 units because all options are 100 units. But you need a margin of $16,700. What? Your leverage is 20 times leverage. This is an index. Index leverage tend to be about 15, 20 times. Your actual position, you buy 100 units of index. Okay, your actual position is 300 over 1,000. Now even worse. Now you want to do this trade now, it will cost you $400,000 now, because our good friend, the index S&P 500 now is 4,000 points. So we can do it in three different ways. Buy a CFD, buy long futures. Margin requirement, one contract is 12,000 US dollars. I say margin requirement. Margin requirement need is actually a deposit. Your risk is higher than 12,000 US. Take a CFD spot CFD position. We need about $16,700 based on this price model. Or you can buy a bullish call trade. One simple call trade cost you how much? Cost you $96.50. So it's $9,600. Or you can buy a bull call spread trade, hedge spread trade. Buy one call, sell one call. You buy the call at night, you go and sell, go and buy one call for $96.50. You sell one call, $92. So your net risk for this trade is $4.50 or $450. This trade was entered November the 2nd, take profit November the 5th. Buy 450, take profit at 960. So basically, this is an intra-week trade. Okay, it's supposed to be it's supposed to be intra-month trade. Intra-month trade. I take profit because market give me money. Why should I be greedy? So and after I make 100% in less than 4 days. Okay, so you can trade futures, you can trade CFDs, you can trade spot, you can buy a bullish call, or you can buy a bullish call spread. Any questions so far? Anybody got any questions? Okay, can you see the next? Can you see this AMD slide? Sorry, AMC slide. This trade during this beginning of year, I was during one of my live market webinar. I highlight to my students, okay, that they should go and take a long term position, okay, on AMC, okay, on the 10th of February this year, bought AMC call $8, 8 for expiry 21st January 2022. How much? $2.56. So each option is 100. So each option will cost us $256. Wait for 3 months, 3.5 months. On 18th of May, okay, the same option which I bought for $2.56, I sold it for $28. Make 1,000% return. Then I hold a few more days. AMC, Superman. I take profit. I sell the call option, the option I bought for $256, sell for $33.50. I make 1,200% return. Next, then I hold for a few more days. I sell some more options. I sell and I sell some more options at $54. I make 2,000% return. Thomas, wow, you buy one option can sell so many times, ah? Excuse me, ladies and gentlemen. If one share, if one you think I buy one options only for $2.56, okay? How many contracts can I buy? One or two? You see now? By the way, ladies and gentlemen, the contract I still after taking profit for 3 times I still got positions left inside. But ladies and gentlemen, one contract $2.56. Can you one contract 256, 256 correct, or 256 times 100 $256. So let's say now you buy 10 contracts it's $2,560. The 2,560 options for how long? The option is valid until 21st January 2022. Now only August, friend. Still got another 5 months. Let me see. Another 5 more months. About 4 months, 5 months more to go. Anyway, I hold it for three months plus. I take profit, make 1,000% return already. Sell a few contracts. I cover back all my capital, still make 200-300% return. And now whatever contracts are still outstanding is pure profit. You understand now? This is what I call fixed risk trading. 10 contracts will cost you $2,560. June the 13th, June the 18th, I sell one contract for what? $54. So basically, I'm making tons of cash at hand. Of course, not every trade is like that, but I just show you the principles, the benefit. Anybody got any questions? Anybody got any questions? Now, fixed risk trade. Let me define more different way. Fixed risk trade for most at the simplest level can be determined by two ways. One, stop loss stop loss value analysis based on time frame. Two, fixed dollars budget fixed fixed dollar fixed dollars capital budget determined by you before you trade. So the first one is actually based on stop loss. So Mr. Tan and Mr. Lam, you Thomas, I want to trade for 1 year. Then we have to base on stop loss value analysis. If I go and do a trade for 1 year long, what is going to be my cut loss valuation? You cannot say I have no cut loss. Nothing. Of course, unless you like me like that. Trade with no stop loss or cut loss principles. Anybody any questions regarding sir? Gentlemen, ladies, especially those are first year. Market go against you. Okay, okay. The most popular one first. Market go against you. But actually, the most biggest problem is not market go. Market go against you is very common. It's part and parcel of trading. You buy shares and suddenly after buying the shares, then suddenly the company gap down. There's nothing much. But the most common reason for a trader to lose is they use the wrong strategies. They apply the wrong strategies wrongly. Means that anyhow use the strategies in the wrong context, or anyhow use the or or use the wrong strategies for the trade itself. Understand what I'm saying? Same reason. One is market based. What is the most common reason for share losing money? Enter the wrong trade or wrong direction. Options. There's one more reason inside. Okay? You use the wrong strategies. That means use the wrong tools to be more exact. Anybody got any questions? Mr. Lam answer say Mr. Lam answer. Reading I don't like okay, I understand coming from. Do not confuse about reading the trend and directionally. Whether you use the trend directional, read the trend or directional rightly or wrongly. Whether you use shares, futures, CFD, spot forex, or options, it is still wrong. You understand saying that? You're still wrong. If you enter a trade wrongly based on wrong market assessments, or you enter a trade, market go against you, whether you trade shares, futures, options, spot forex, CFDs, warrants, whatever, or knockout, or whatever, you still lose money. Okay? But once the set after set position, then say, why should I trade? Look carefully here. Why should my students spend $11,700 to do 100 share trade when you can buy option for $600? He's right. A good trader must risk less money, lose less money, make more money. Options let you do that. Hey, beyond me, the company can drop 10-50% right now. Nothing, okay? Beyond Meat, average drop 20% in one day. Okay? So you guys imagine, just imagine, you go and buy the trade for 11,700. I think drop 10% against you. That is 1,000. That is $1,700. Sorry, $1,170. So when do you share trade? Scalping lah, like here like that. Flagger stocks. Don't ask me how many shares I buy. Okay, this one February, what the mood to do it. Uh, Long shares at 169. What time? 10:43 p.m. 11:02. Take profit at 175. Make $6. How many long? Make $6 in 19 minutes. 1,000 shares times $6. 6,000 US dollars. This one swing trading space. Buy the shares at $28.97. Hold it. Make money. I okay lah. So cheap. I hold it lah. 1,000 shares. I hold it up. I buy it at 28.97. Hold it until 32.71. I make about almost $4. 1,000 shares, $4,000. 10,000 shares, $40,000 in how many days? From 8 to 10 or 3 days. This one even better still, more fierce. Look carefully. On the same day, March the 9th. Can you see now? Okay, 10 o'clock, enter. Buy game shares at $225. Okay? Okay, at 10:36. 11:06, half an hour later. Take profit at 223, make $3. Then later, after midnight, bought, got chance give me. Buy the shares at 173, $173. Okay, hold it for 1 hour or so. Get out at 184. I make how many dollars? Hey hell, I make $11 for this trade. In 1 hour, I make $11. This is this is this one time that you want to trade shares. Options only to abnormal, highly volatile, big move for scalping trades. Then shares be better. Mr. Tan and Mr. Lam and who else inside the new people? Anybody any questions this one? So you understand when I use shares, when I use options Gentlemen, in 1 hour you make $11 per share. Anybody got any questions? Especially the new people or the people come 1 or 2 times only. Yes, trade, not my trade, my student trade. 4th of June, enter a trade. Instead of buying the expensive options, he buy a bullish what is called a spread trade. Okay, he buy $2.33 or $233. Hold it from 4th, hold it to 7th, sell it for $3.43. So he made $1.10 in how many days? In about 3 days. His capital is $2.33. So technically speaking, he made about 30 to 40% return in 4 days. Ladies and gentlemen, if you trade shares, do you think in 4 days can you make 40% return or 30% return? Okay, these are some of the public comments. Okay, this guy on May the 27th this year, he like Mr. Lam and Mr. Tan and a few other people here. Okay, last time here join one of my public session. As I said earlier, he was telling us he's so generous. He commented, he said, joined Thomas online market session yesterday. Because he put up the trades up. Then he said, I got Beyond Meat. They entered Beyond Meat. They explain what to do. Okay, so I said instead of buying the shares, I told him to buy a vertical what called a hedge spread trade. He enter a trade on the 25th and take profit on the 26th. He makes 74% return. By the way, this guy at the period of May, the time here, he's not even my student. He's now my student. He is my student for my current class. Directional class. Anybody got any question regarding this slide? By the way, can you see me, hear me now? Good questions. The losing trade is not a problem. The losing trade is that our friend here enter a trade for how much? He buy a trade for how much? At 87 cents. Do you think you need to have a stop loss at 87 cents? Of course, we want to cut loss. If the market confirm that it's going against us, we cut loss. Okay, we buy to close at 7, we sell to close at 15 cents back. But you think we need to put a stop loss order for 87 cents? No need. One thing you need, if you've learned from me for directional trading, is that every trade we go in is using your stop loss capital. Hey, the only reason why people use stop loss is what? No, because they can lose 30-40%, and then they make only 2-3% returns using shares. That's why you use a stop loss with shares. But using options, 87 cents only. What's the problem? This style of trading I share to you now are using what called you are using to trade using stop loss money. So the question is, do you think you need to put a stop loss, cut loss order on your stop loss capital? Worst case is wrong. He lose 87 cents or $87 per contract. He did 2 contracts. This is another student trade of mine. Post in the public group and the blanket is name off. Okay, live teaching trades. 0 DTE, fixed capital of $500. You see, look carefully. Every trade got specific time frame. Okay, how much capital? How many days? 0. 0 day means what? Intraday trade. What's the capital exposure? $500. So what is the maximum profit? Maximum profit is $160. What's the maximum loss? $340. What's the return over trade? 447% return. You understand what trading about? Mr. Lam, you understand what I'm saying now? So every trade we go in, they got this definitive number. What is my capital? Worst case scenario? Anybody got any questions? By the way, this one is passive farming style. And he make money, okay? He make 47% while sleeping in bed. He did not close the trade because the trade expire in his favor. He's risked $340 to collect $160. Yes. Good question. Iron Condor. For my world of trading, they got 18 different strategies of Iron Condor. You're looking at one only. Okay? And by the way, ladies and gentlemen, for those if you BC Tan, how you get to know about me? If you come from Facebook, please go to TRT Traders group page. You gotta look through it. My student post a trade like that, 0 DT now in season. Like 1 month, 1 month do 10 trades, can make money on 10 trades, man. In season can. If the market turn off season, we lose more money. Don't mind. Every trade going, maximum profit, maximum loss, return, duration, objective, all are fixed. are known by you before you even click the button send trade to the market. This person is doing a boo bear trade. Means that he's doing a trade. The market go up, make money. Market go down, market highly volatile, also make money. This is a different from iron condor. This one is sell iron condor for day. This one is what? This is what? This is the intra-week iron condor. Means what? Buy one. This is a sub-weekly trade. Okay, open the trade on the 15th of June, expiring on 16th of June. If you trade by CFD, you need $71,000 to do. Why $71,000 to do? Because the time was 14,150 level. So times 100 is $1.4 million. So before we go further, what's the best strategy? Excuse me. All strategies are best strategies. As long you're a consistent winner, no? Make money, know why. Lose money, know why. Market change, know why. Once you know this 3 whys, then you can change with the changing market. Okay, for those who don't understand the world of trading, this is my typical options tutorial program. Okay, this one is not open, there's no direct intake. You have to go and learn from me you must come as a junior student for 4 months and talk about it. Look carefully. Can you see now, Mr. Lam and Mr. Tan? Any public members beside these two traders here? Can you see my slide here? Look carefully. Market opportunities come first. Trade feasibility depends on your understanding, your skills, your knowledge, your risk capital, your emotional capital. What is your objective? Okay, then your time frame, intraday, intra-week, intra-month, intra-quarterly, intra-year, 3 years, whatever. Then from there, once you got this market opportunity is fixed, then trade feasibility and objectives. Once settled down already, plus your capital, then you say, okay, what method should I use? Should I buy a call? Should I sell a call? Should I do this? Should I do a strangle, diagonal, whatever it is? Once you determine your strategies, then say, should I buy or sell these strategies? Once you determine yourself, I want to buy a vertical spread for 30-day cycle, then you determine your trade parameter. What is my entry price? What is my take profit price? What is my capital needed? What is my risk? What is my dollar value risk? Then from there itself, once you enter everything, you say, what is my exit strategies? Exit strategy, what is my exit price? What is my time frame for exit? Then after that, take close already, see market, repeat. Can I repeat with new trades or not? This is the way of the thinking trader. Tan, Tan, you understand what I'm saying? BC Tan, you understand what I'm saying? Any new people? Please, I sharing to you 20 over years of trading in US market. Everyone okay? Now, in the world of trading, we got 3 styles: fast, active, aggressive. That way we call day traders. Minutes to hours. Enter 5 minutes, take profit. Enter 1 hour, 2 hours, take profit. The first one you can call day trading or scalping. Second, active directional trader. Active but directional is what? Days to weeks to months to years. Swing trading or positional trading. Then we got more conservative, passive income trading. Okay, passive trading. Multi-directional trading. Days, weeks to months. So these are a different style of trading. So if you want to go that way, this is a hunter, fisherman, farmer. Multi-directional trading is not based on chart patterns, it's based on option premium analysis. So this is an old slide which I put up many years ago in Facebook. To become a winner, you must learn the art of losing. No such thing as I want to make money. Ladies and gentlemen, everybody go to the market to be successful traders. Okay, to be winning traders. Who go to the market to lose? These are portfolio management. This is my student. Basically, we do our philosophy very simple. We don't bet the horse. It means that we don't bet the house. We spread the trade. Example, a $5,000 account size, we can do 10 trades easily. I repeat, for $5,000 account size, you can do a basket of 10 trades. In this case here is what 5 bullish, 3 sideways, 3 bearish. The primary objective exercise is for a few things. One, to maximize your learning experience. Two, to make sure you won't go wrong. To minimize the market risk. To diversify your learning experience. For you as a beginner level trader, prepare to spend the first 200-300 trades to learn. If you're looking for secret methods, you can leave now. I guarantee you, all methods can make money as long as you're a winning trader. Remember, when you buy shares, somebody must sell you the shares. If you buy the shares at $150 and you cut loss at $130, your $2,000, your money go to who? This is one of my practitioner level students. Practitioner level student is what's called my middle level students. 66 straight in 6 weeks. Any question, anybody? Any questions, anybody? If not, ladies and gentlemen, why don't we take a 10 minutes break? Why don't we take a 10 minutes break? We come back at more than that. Your shares definitely lose more than that, my friend. That company really can go crazy. One bad news or one bad report, Moderna medicine kill people, injure people, a heart attack, $10 nothing, okay? So gentlemen, why don't you all take a 10 minutes coffee break, toilet break, or whatever, smoking break? Of course. The price action value really is around that range part. Okay, ladies and gentlemen, take a 10 minutes break. We will come now. Okay, make it 12 minutes. We will come back at 10:15. Come back at 10:15. For those public members are new here, this is my WhatsApp. If you want to have a private discussion to me over Zoom or over WhatsApp, drop me a message. Okay, ladies and gentlemen, so let's take a coffee break, Ken. We will come back in 10:15. 10:15. Would that be good?